Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. The latest U.S. China summit is drawing global attention as Washington and Beijing appear to be entering a new phase of strategic competition. While trade and tariffs were still high on the agenda, this round of talks also focused heavily on AI chips, advanced technology controls, and critical supply chains. The presence of major American tech CEOs, including Jensen, Huang, Elon Musk, and further highlighted how the rivalry is increasingly shifting from traditional trade disputes to the race for technological dominance. Now, at the same time, markets are responding to hopes of easing tensions. Wall Street rallied after the summit, while Korea's KOSPI once surged past the 8,000 mark for the first time ever. So has this summit helped lower global economic uncertainty? For a deeper discussion on this, we connect to Huang Kim, professor of banking and finance at Texas A&M University's Mays Business School. A very big welcome, Professor.
Always a pleasure.
So yesterday on the 14th, we saw the two leaders of America and China sit down for summit talks. I wonder, from an economic standpoint, how did you assess the overall summit?
Well, I would characterize the summit as more like a kind of stabilization summit and a kind of consensus summit rather than a breakthrough kind of summit in terms of like trade and all other deals. So the most important takeaway to me was that both sides seem to recognize that the cost of like these uncontrolled escalations in Iran and other places have been too high. Political risk and uncertainty, not only for the US and China, but for the whole global economy. So I think instead of trying to solve like every structural disagreement and tensions, the summit seems to have focused on creating some framework for managing competition and reducing immediate economic risk and uncertainty. So clearly not a great or the grand bargain outcome or trade or even technology, but it's more like, let's start talking and then let's get into details issue by issue. But clearly there are some meaningful positives as well in that like both sides seem to discuss the somewhat selective tariff issues and managed the trade arrangements. So I think I would say there's some stuff like, and also I saw some, the Boeing planes will be bought, although the number of planes were smaller than expected. And I saw the Boeing actually stock price going down because of this underwhelmed actually compared to expectations. But overall, I think it has not much content, but I think at least in terms of messages, it was clearly not like, something to be contentious. So I think compared to 9 years ago, I think it's probably better.
So the two sides clearly seem to have an amicable atmosphere from yesterday. Now, the New York Times described the core agenda of the talks as the U.S. pushing its so-called 5 Bs, while China focused on the 3 Ts. Could you elaborate for us? What does that tell us about the nature of these negotiations?
Yeah, just people always like to put this kind of things like, the Boeing, like soybeans and board of trade and all this kind of Bs, right? And then the Ts are obviously tariffs, technology, or Taiwan. So, but the angle, I think it's clear to me that like I would describe the structure as like the US wants commercial deals, and the China wants more like, the strategic, the deals. So they're looking at somewhat different things, although they're closely interrelated. So obviously the US side is looking for more visible, measurable, and I think the economic outcomes. So the more purchases on the US aircraft, the agricultural products, energy, and also the channels for the investment and trade, obviously. And these are very tangible items. And it's kind of similar when the US actually visited Korea or Japan, basically the same story, I think. So basically, there's not much difference compared to other countries in terms of the US stance. On the other hand, the China, who actually really tries to push for the bigger power shift and all this kind of things toward like, the global markets and many other things. To them, I think the tariff is extremely important because of the main engine of growth for China is obviously the export. And also they want the domestic growth, but if the tariff actually is really severe, then they actually will get hurt, although they can diversify markets to other places. So that's going to be one thing. And then the technology controls affect actually China's AI and semiconductor ambitions. So that's going to be the thing. And then Taiwan is, of course, has always been like, their big agenda for political and security red line, I think, for Beijing. So I think to China, I think this basically is more like, the security concerns and their the ambition for the power grab and growth and those kind of things. So they want to have a little more leeway for this kind of part from the U.S., while the U.S. just wants the typical business deals and more economic deals.
Right. So clearly they had two different ways and directions of goals before the summit. But before we continue to speak about the details, we would like to invite another guest to this show, Sung-Soo Eric Kim, founder and CEO of DataCrunch, and adjunct professor at Yonsei's Graduate School of Business for a deeper discussion on this. Good to see you, Professor.
Thank you very much for inviting me.
So let's join you right away in the discussion. So talks over NVIDIA's H200 chips once again put AI chip export controls in focus during the talks. And after the summit, where do you see U.S. China tech restrictions heading right now? Do you think there's any room for easing them?
So I think that this summit is very significant. As we've seen in the welcoming, Xi Jinping really took efforts to welcome Trump. And I think the menu was very symbolic. They had Peking duck, which was served during the 1972 Nixon's visit to China, and when they had a summit with Mao. So China is trying to be really diplomatic in this setting. Of course, a hot topic was NVIDIA's H200. It was surprising that initially Jensen Huang was not planning to visit China, but U.S. Air Force Number 1 did a surprise stop in Alaska and actually had Jensen Huang aboard on Alaska. They had a detour. So I think it was also a diplomatic, event showing how much the chip agenda is important. U.S. allowed to export NVIDIA's H200 chip last year. That was also very surprising because the stance of U.S. was that they're not going to export any NVIDIA chips to China. Of course, this is not the B200 chips, Blackwell chips, which is the most advanced chip for NVIDIA. And China is considering whether they would import H200. They already have, U.S. and China have already got into an agreement that a couple of Chinese companies will license to import NVIDIA 200. For example, Foxconn and Huawei, Alibaba, a couple of companies are licensed to import 75,000 chips per company and 750,000 units per annual. But the problem is Chinese government is also putting restrictions on U.S. chips. For example, just last month, the State Council order made a mandate that they will not allow foreign technological dependency for government servers, meaning that they will not use any foreign chips in their state-owned servers. And also, they're making a requirement that Huawei and all these Chinese companies should prioritize using Chinese chips because they want to cultivate the industry base of semiconductors. And U.S. is playing a strategic game. If they supply H200s, not B200s, which are the most advanced chips, H200s can slow down China forming the AI ecosystem around Huawei. That is U.S. strategy. Now, it will be a good sign for Korean companies if NVIDIA could sell to China, because we expect that's a huge market. And of course, we all know that NVIDIA uses SK Hynix HBM3 and 4 technology. So we can expect a higher export. But looking at the ground, it's a little bit unclear whether China would actually import H200 chips. That is a diplomatic ground and also a technological policy that China is still debating whether they would allow Chinese companies to actually use H200 chips.
So you've mentioned it's a good opportunity for Korean chip makers. Then, as supply chains continue to shift, what kind of strategy do you think Korean companies should be considering right now?
We also have to take a look into China's changing policies. China just last month made a restriction to Chinese companies to have at least 50% of domestic semiconductor equipments for their new fabs. So that means that SK Hynix and Samsung Electronics will have a smaller share if China continues this policy, and that also means that China is shifting towards a more pronounced restriction in the semiconductor policy. China is also imposing regulations on companies that are exporting to United States, just like what United States has already implemented through the CHIP Act during Biden's administration. So those kind of things are, a positive and macro level changes that we have to outlook. In that sense, I believe that Korean companies have to diversify, sales portfolios, focusing more on Europe and other regions to counter the risk of changing policies of Chinese government. And also we have to be aware that Chinese technology is catching up with Korea right now. For example, SMIC is now producing 7 nanometers. They're getting into 5 nanometers. I believe that it's a couple of years away until they reach the technological standards of Korean companies and Taiwanese companies in the foundry business. The only thing that is restricting China is very important equipments like EUV from ASML being restricted to export to China so that they cannot develop the most advanced technologies. And we also understand that CXMT is also manufacturing HBMs. They can't manufacture HBM3 yet, but they are manufacturing HBM2 technology. So in a couple of years, they might catch up as well. So what should Korean companies do? We have a plan that we're going to build the largest semiconductor cluster in Korea. So we have to have a ecosystem strategy, building a lot of domestic Korean companies in the semiconductor ecosystem. In the semiconductor industry, it's not only about SK Hynix, it's not only about Samsung Electronics. There should be small, medium companies that manufacture equipments, do the design, and we need that whole ecosystem clustered in one location. So that's a really important strategy for Korean semiconductor industry.
Thank you for that opinion. Now, meanwhile, China has been pressuring the U.S. through rare earth export controls. Professor Huang, do you think the summit could become a turning point in easing supply chain risks as well?
I mean, it could reduce the immediate the aspect of the risk, but it's not going to eliminate the structural problem because rare earth are now China's strongest counter leverage against the U.S. technology restrictions, obviously. So the U.S. has semiconductors and export controls with some allies, but I think that China has critical minerals and processing capacity and also the cheap labor, etc. So I think that's basically the big issue because their weapon is basically the rare earth. So I think clearly the supply chain management problem is going to be there. And obviously they still also have very the restrictions on certain materials for the export. So it's like yttrium, dysprosium, and terbium, and all this kind of thing. So I guess until the production process or the way that these chips are made massively change, I think I saw some innovations replacing some of them, but clearly it's not that easy. And also it takes time to find the other suppliers because of many issues, including the pollution and many things. So clearly, the mining is only one part of the story. Processing, separation, and magnet making, and all these kind of things are obviously very, very important choke points as well. So I wouldn't call it a turning point, but I would say it's more like a possible alleviation of the risk for the time being, and probably U.S. and allies probably try to earn some time. That's probably it.
Right. Then what about the energy sector, Professor Sung-soo? There were signs of easing tensions in the area, including reports of resumed U.S. LNG exports to China. How much could this help stabilize raw material prices and inflation as well?
Okay, so I think, United States and China has one thing that they could agree during the summit to manage the Iran situation, because this is becoming a global economic risk. And China is greatly hit by the Iran situation because they heavily depend on the oil from Middle East, and the Hormuz Strait is being controlled, and it's really impacting China's economy. The LNG import was not particularly only, arranged because of the Iran war with the U.S., but it was agreed on some time already. So you're seeing that the first vessels are arriving in June, and U.S. is demanding China to import more LNG because that's their main strategic goal right now, to export Alaskan LNG. So they made an agreement with India a couple of months ago as part of the tariff agreement. And they're making agreements with other countries to export LNG. That is their strategic focus.
Right.
For oil, U.S. is the number one producer in oil right now. And they are trying to, convince a lot of countries to import U.S. oil right now. So this is also a pivotal moment, not only in terms of U.S. and China talk, but also in terms of the energy portfolio around the world, because the U.S. is trying to push the oil dominancy once again as a policy. So in that sense, it's a win-win situation because China has to secure an alternative source for oil, but I would say that temporarily until the situation mitigates. So U.S. will export U.S. oil to China, to mitigate the situation. But in order to control the inflation, fundamentally the war has to stabilize. That is the number one priority, I think.
Right.
And even after the situation gets settled, we're not sure how long it's going to take to reactivate the oil refinery global business.
Now, before we conclude our discussion tonight, just briefly, Professor Huang, following this summit, we saw a boost in Wall Street and the KOSPI as well. So what kind of impact could this summit have on global market volatility moving forward?
Well, I think I just looked at the futures price for the U.S. market, and then I also saw the Korean stock market after hitting the 8,000, and then I think it kind of dropped. We all expected that there will be some realizations of the profits after hitting the 8,000, which is a landmark. So this one is more technical, but for the U.S. part, I think already, I think the market expected a bit lukewarm, probably just somewhat bland, I think, the market outcome, the summit outcome. So I think the market's going to be more volatile for the time being because the situation doesn't seem to be completely, advanced or just moving ahead. But I would say this for the time being, the political risk and uncertainty is going to be still high, and there will be mixed volatility for the time being. And then I think at the same time, the AI and all these kind of things will still push up the market actually. So mostly just a positive, the upward swing, although with some higher volatility expected. For Korea, I think still the summit actually that didn't have much outcome probably is good news to Korea in that at least the development of the chips and the semiconductor from the China side, I think it's not going to be that accelerated for the time being at least. So to Korea, I think for the time being, still I think market's going to be volatile, but I think we'll move up a little bit more due to the positive news.
Right, so we'll see a lot of volatility moving forward, but we'll also keep tabs on how these strategic rivalry between the U.S. and China would move from here on. And now, as for now, we'll have to conclude our discussion right here. Thank you so much for your insights, Professor Huang.
Always a pleasure.
And of course, Professor Sung-soo as well. We really appreciate it.
Thank you very much.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.